Welcome to the Daily Update, Snapshot edition. This is being prepared Thursday, March 24th, where we'll briefly look at the action in the market today and then see how things look for Friday, March 25th. And I actually changed the slide a little bit, even though there's a couple of mistakes in the slides that I will point out here. Just to recap what happened on Thursday, it was a positive day. And what we lost on Wednesday, we were able to more than get back on Thursday. Now we have to see, where do we go from here? We started with a flat to higher open. The futures were positive before the market opened, and we were able to climb to R1. As the day went on, prices moved sideways and R1 acted as support. If we started to come back down, R1 gave that the ability to bounce back up off of that. There was some late day buying, and here's one mistake. We closed at the high above, and this should be R2, not S2. R is for resistance. That's when we're having an up day. S is for support, and that's when we're having a down day. We ended up being up 1.43% for the day. One thing that is a bit concerning is that we are seeing volume drop off. It's below average and declining. And each day this week so far, we have seen a drop off in volume. Even if it's an up day or a down day, we're still seeing volume declining. So we're looking at the technicals, which are still overall positive, but we have a lot of overhead resistance, and we have a number of indicators that are giving us overbought signals right now. We're focusing on earnings, which we're coming up to the end of that. Inflation and interest rates, which seems to be at the forefront of everybody's mind these days, and then the different geopolitical concerns. So the S&P continues to be out of correction territories. The technicals are positive and improving. If we have an up day, they're improving. If we have a down day, they are weakening. One of the more positive things that happened on Thursday is that the S&P was able to regain its 200-day simple moving average. And we've been like a pogo stick. We got above it, then below it, then above it. Okay, we'll have to see what happens on Friday. Prices continue to be in a range, and if we keep going higher, we still have that previous short-term double top to deal with. And then the ongoing situation between Russia and Ukraine, inflation and interest rates, and then China, mostly for how that can influence the supply chain, because they've been having lockdowns in China, and will that affect the US economy? On Thursday, we had the durable goods come out, and that actually declined. It's not a really powerful economic report. Sometimes during the economic cycle, it has more of an influence than at other times. On a valuation basis, if you look at the S&P by itself, we are overvalued. If you look at it on a more intermarket analysis basis, we are fairly valued, mainly meaning that we're comparing it with bonds and interest rates. The trend is positive, and our ADX is weakening. I'll briefly go over that chart. With the up day, we have a positive bias, and we, for the last number of days, have a positive momentum. So here's the daily chart showing how we climbed up out of that base. This red area right here is overhead resistance, and we don't have yesterday's high to take out. We're well above that. It's the high from Tuesday. Can we get above that? And there is a lot of lines right here. So that could be rather significant. Or are we going to fall back from this? This is a Friday session coming up. Sometimes people don't want to go long over a weekend, especially given the geopolitical backdrop of things. We'll have to see. Is volume going to continue to taper off? You can see down here how we've been declining with each passing day this week. Fridays are usually pretty good because people are shoring up different positions, but we'll just have to see how that goes. Then looking at our trend, the ADX is continuing to weaken, but the green has crossed above the red. Now, again, the ADX does not show the direction of the trend. It just shows the strength of the trend. And as long as we're above 20, the way I interpret this, we are still in a trending environment, but that trend is weakening. We need to see the green and the red line get far apart from each other, kind of like the inverse of that was true here, before we see the ADX really start to advance. Then our Arun is still looking fairly positive. We're showing that buyers are in control with the green line spiking up, and we're seeing a decrease in selling pressure. But overall, when you compare the two, we went sideways again. And then looking at our moving average spaghetti chart here, we still have the 100-day simple moving average that we need to clear. Now, if we decline from here, we're going to go back into some of this mess. But if prices can continue higher, we do have some overhead resistance. Usually the 100-day moving average is not one that I look at all that much, but since we've been chopping around so much, that's why I wanted to bring this up, because it is becoming kind of important for us to look at. As far as our rainbow, we're coming back up through the rainbow. We're starting to hit some of these resistance areas as we get back into, we try to go to the upside here. Looking at long term, we were able to regain the 200-day moving average. We closed at 45.20 and the moving average is at 44.75. So we're now back above that. After yesterday, we were below it. The day before, we were above it. We're pogo sticking back and forth. So what's our outlook? We are still out of correction territory. We're still in an intermediate term range. If prices continue to advance, we're getting close to that short-term double top. The earnings season is just about coming to an end right now. There's still the battle between growth and value. Economic reports coming out on Friday. Pending home sales, that'll feed more into the real estate scenario that's been developing. The big one that I will be watching for is the final reading of consumer sentiment. And then I will post a chart of that after Friday's session in the daily video and probably also in the weekly video. And then the different geopolitical events, Russia, Ukraine, China, and then the president is in Europe right now. So that could generate some kind of catalyst one way or the other. Different scenarios. For going down or being negative from here, one of the scenarios that I continue to look at is, are we going to revert back to the previous trend? Are we just wearing off this extreme pessimism that we were seeing before we get set to go lower? That's looking less and less likely with each passing day. The other scenario, which is a lot more possible, in my opinion, is scenario B, where we are overbought with a lot of our indicators and we still have lots of overhead resistance. That could keep us from going higher or maybe even declining. Looking at the positive side of things, it is pretty clear that we are coming out of a base. Our oscillators are positive. There are some of our moving averages that are providing support because they're below current prices. Other moving averages are providing resistance and are still above current prices. And this should be Wednesday's, or excuse me, should be Tuesday's high, Wednesday's high, Tuesday's high. Okay, I got this all mixed up. Can we take that out? We seem to get right up to that level and just stop. And it would be much more positive if we can shoot above that, if prices advance. The third scenario is seeming less likely, where we are in an intermediate term range, but we're having these massive wild swings going up and down. What we want to see, if you want to get more into a credit environment where you're selling iron condors or selling credit spreads, we want price movement to slow down and then get to the point where we're really not trending. Maybe up a little bit, down a little bit, up a little bit, down a little bit. We're not in that kind of an environment right now. So number 3 seems to be the least likely scenario. Number 2 is still probably the most likely scenario. Number 1B could still be possible if we see a bit of a pullback on Friday. So our conclusion is the S&P is positive and remains in a range. Short term, we are positive, but we're hitting some overbought levels as well as overhead resistance. Intermediate term, we are positive. Our oscillators are positive. Our moving averages are either providing support if we drop or resistance if we try to go higher. And then another positive thing for the long term is that we are now back above the 200-day simple moving average. So thank you very much. If you want to have a more in-depth discussion or explanation of how I reached the conclusions that I have, please watch the full daily video.